Financial topics, trending news, politics all come together here at the Vault.
Charles, so the market, it's been at an all-time high recently, but it is starting to kind of ebb and flow, as you always say it does. So I'm curious what your thoughts are on the market right now and what you think it's going to be like for the rest of the year.
Yeah, great question. So right now we're in the middle of a bit of a transition, and people are starting to see, due to inflation right now, obviously gas prices are going higher, food prices are going higher, housing is going much higher, rents are going higher. So with all that, people's purchasing power is being eroded. One, because the Federal Reserve continues to print money. Now that's a double-edged sword, due to the fact that I was always taught that the only time you increase the money supply is when you have an equal increase in production.
Okay.
Right? We are no more productive today than we were 10 years ago.
We're less productive today.
We are less productive. Now you may say, due to technology, we are more efficient, right? That I could let you get away with. But in terms of total productivity, it really hasn't gone anywhere over the last 20 to 30 years.
Yeah, it's gone down, more automation.
Right. And wages have been stagnant, right? So your average wage for an individual who's making probably under $150,000 really hasn't increased over time. Those who are making millions and millions they've seen their incomes go up and increase. But individuals who are working day-to-day jobs, construction, landscaping, plumbing, electricians, right? Now we're starting to see a little bit of wage inflation for those individuals now, and we're starting to get a little bit of market churn.
Okay.
Because over the last probably, let's call it 10 to 12, you could even say since the 2000s, early 2000s, technology has really been the sector that has taken over leadership of the market. The FANG stocks now make up about 22 to 25% of the NASDAQ 100. Okay, so that if those companies just sneeze, right, it's taken down the market a bit, right? So due to the fact that we're now going through a bit of a rotation where people are starting to get back into companies that actually do and make things, right? Because they've been neglected over the past 5 to 10 years. We're now starting to see people get out of those big tech names. So they've been selling off, and now it's giving us some market volatility. Secondly, the 10-year treasury recently is, I believe the last 2 to 3 weeks touched 110, and now it's already hit 1.3. That's a different dynamic. We haven't seen rates increase that quickly in a while, and sometimes that can scare the market, because what that does is it squeezes the margins of those high tech companies, right? Okay. They can't make as much money if they have to borrow at a higher rate.
Right, of course.
So that's why I believe we're starting to see more volatility in the market, but it's not necessarily a bad thing, due to the fact that we're spending money on higher lumber prices and higher home prices. That's actually going to have a good effect on the economy, because it's going to put more money in the hands of the people that are going to spend it, right? People who have a higher propensity to spend. And that is what picks up the velocity of money. When the velocity of money picks up, meaning the money that I have that I give to you and you give to somebody else, if that picks up, that means our engine is starting to churn, and a lot faster, which picks up the economy, because we're a spending-oriented economy.
Yeah, we are. Yeah. Okay.
So towards the end of the year, I'd still believe that the big tech names are probably going to regain that leadership, because at the end of the day, it's about investing in the trend and not the trade. One thing I always tell my clients is, I always want to be invested in whatever the trend is, but I want to also have something in whatever the trade is of the day, right? So that's why I'm starting to add a little bit of oil exposure, energy exposure. I'm starting to add some industrials to the portfolio, right? I'm starting to add some financials to the portfolio. So my clients can take advantage of companies that have purchasing power, and companies that can increase prices over time, so that inflation isn't that big of a bite out of their retirement plans and their cash.